Again, what a great way to come back from a vacation. We're all kind of sleepy-eyed, but not the investors on Wall Street. They are putting in buy orders. Let's break down all the action. We have Chris Retzler, Needham Growth Fund co-manager, with 2 picks for you to add to your portfolio. Paul Dietrich, Fairfax Global Market CEO, who is going to tell us why he thinks stocks will rally in the second half of the year after, again, word of another pullback. Larry Shover, SFG Alternative Chief Investment Officer at the CME. Larry, before we start with stocks, I want to talk about gold because that is way down today. Why?
Well, think of it this way. Gold rallied 70% between 2008 and 2011, and for the exact opposite reason, it's going down. Economic data around the globe is getting better. Today, we do know that Ukraine, that whole tension area is getting less tense, bad way to put it. But really, the big reason is that the normalization of U.S. monetary policy will continue to be a cross over gold's head. So I'm not surprised to see gold continue to dwindle lower. I still think it's going to be $1,200 an ounce by the end of the year.
Chris, do you think that the sell-off in gold is indicative of investors having a heavier appetite for risk, and that's partly why we saw equities rally today?
I think people are getting excited. There's really no other place to invest. We believe, fixed income has, yields have come down here in the big early part of the year. We think equities are the place to be. We're looking at new opportunities. We think that the second half is going to be a lot better than the first half. We've spoken in the past. The one certainty that we faced was weather was really terrible. We think it filtered through the economy, and I think we're now beginning to see some better economic numbers, which should ultimately lead to better earnings growth for equities.
Paul, let's talk energy prices again. You say our production, and it is spectacular, the new production from natural gas, from oil, from a whole thing is going to keep prices moderate. But I would tell you that I think gas prices are not moderate. I think they're pretty high right now. And these new EPA rules that the administration is going to be issuing next week could push electricity prices a lot higher, too. Isn't that a problem?
You have to look at this on a global basis. I mean, we're paying about $4 per 1,000 BTUs of natural gas in the United States, where they're paying $16 in Europe. They're paying $18 in China. So if you look at it on that basis, it's really cheap. We're also producing more natural gas because of the technology and fracking. That's going to continue. And so natural gas prices, I think, are probably going to remain about at this level, which are, from a global perspective, very, very attractive.
All right, let's go back to Chris, who's joining us here in studio. So where do you see us headed from here? Do you see volatility through the summer, or is this an inflection point? We're hitting records again. We're back in the stage where it's day after day, at least for the broad market.
Yeah, we think volatility is going to remain here. We had a great year last year. We think the market is backed up a little bit. The Russell 2000 certainly gave back a lot more than the S&P 500, so we like a day like today. But we think volumes were a little light. We wouldn't get too excited. We think there's opportunities throughout the summer to be buying some good names at cheap prices. So I wouldn't get too worried that you maybe missed today. I think we'll see some opportunities through the next couple months.
Larry, I don't mean to rain on anybody's parade. It's a great day, but a lot of talk about whether Europe is really recovering as well as it should be recovering. There are questions about whether what the EU is now doing and trying to compete with our QE is going to work. What do you think about the European concerns? Is it perhaps a little too rosy now, a look at their recovery?
You know, David, I do think it's a little bit too rosy. I mean, I think they've gone too far, too fast. They do have some deep potholes that they have to address. However, we do know that Mario Draghi is very good at rhetoric and putting out some great content with the ECB, and I think all hands are on deck for June 5th, expecting him to pull out a miracle, and what that's going to be is hopefully asset purchases. At least that's what the market's hoping. But you're right. I think there is a lot that needs to be addressed.
Don't
too far,
believe
too
in
fast.
miracles, except in hockey, by the way. There are miracles in hockey, but not with central bank presidents. Lori?
Go Kings, go!
No,
I'm the voice of Liz Clayman today.
Rangers. At any rate.
I'm channeling Liz today. Go Kings, go! All right, I want to, Paul, go right to one of your picks because you have Pilgrim's Pride on your list. Obviously, a newsmaker today. What do you think is going to happen? Do you think they'll ultimately get Hillshire Farms? I know Hillshire bid for Pinnacle, and Pilgrim basically saying we're much better for you. We're a much better match than that Pinnacle partnership. So go with us. How do you think this one's going to sort out?
This is one of my favorite stock picks, and I picked it before I knew that they were going to make this bid today. But this is a great company. It has a moderate PE of about 11. It has a 46% return on equity. It has huge free cash flow. And you look at what happened today in the market, both the stocks, Hillshire and Pilgrim's Pride, went up. And so I think that says a lot about how the market views this. This is a great company, and I believe that everyone thinks that this is a great merger.
Paul, let me stick with you for a second. I want to get a little optimistic after my pessimism and talk about Asia for a second, because we already know that they don't need a great percent of their population in order to have hundreds of millions of people in the middle class, because there's so many there. But the middle class in Asia, which is now, I don't know, about 500 million more or less, could triple in the next decade. This is a huge market for the U.S., is it not?
It is. That's what the IMF and the World Bank is saying, that we're going to see going from about 525 million people that have a U.S. equivalent middle class income going to 1.75 billion, wow, which is 3.5 times over the next 6 years. And the first thing that people do when they get into a middle class income is that they change their diets from rice and vegetables to protein. And protein is what American farmers, we provide the natural resources for that. Only 38% of land in Asia is arable. They've never been able to feed their 3 billion newly affluent consumers. They never will be. This is a long-term, very good trend for American farmers and American agricultural products and American agricultural companies and investments.
Cool.
All right, although grains, as you can see, the complex down in excess of 1% across the board there.
High low.
There you go. Christy, let's talk about some of your picks. One that caught my eye, Air Lease. We're looking at the price of crude oil at above $104 a barrel here. So you say this is a play on efficiency.
Yeah, we love the company Air Lease. It is a leasing company for airlines, so as oil prices and gas are very expensive, airlines are looking to upgrade to more fuel-efficient planes. Air Lease, you should think of it as a asset management company that manages airlines. Very well-run, well-respected management team, significant insider ownership, and they have been growing, just a great business, and I think they've got a very long runway here as the world continues to grow with more airlines internationally.
Well said. Chris Retzler, Paul Dietrich, Larry Schover. We will check in with you in a few minutes for the S&P Futures close. Thanks to all of you.
Thanks, gentlemen.